Data-driven insights for serious traders. As the closing bell approaches, momentum is analyzed, tomorrow's key price levels highlighted, and the setups that matter most broken down. This is Trading the Close with Verified Investing.
Welcome to Trading the Close, everybody. My name is Drew Dosick, and today, a new day in the markets. The government shutdown is over. We should be having a rally, right? Nope, not so fast. Man, the markets were slammed down today. In addition, the CME Fed Watch tool is now predicting a 50% chance at a rate cut in December. That was much higher just last week, pushing 60-70% and higher. So now investors are concerned about no potential cuts coming in December. We had a big tech-led sell-off in the markets today. Man, guys, we've got a lot to talk about. So let's get into the market summary board and check out where everything is landing today. You can see here the Dow Jones down 1.75%. NASDAQ down the biggest, 2.12%, highlighting the fact of what I mentioned earlier. This is a tech-led sell-off. There's been a large concentration of investors in tech. AI valuations are now in question, and it's clearly displayed. People are exiting there out of the NASDAQ. S&P 500, heavily weighted in tech, down 1.71%. U.S. oil, almost flat, but still up 0.21%. Gold, also experiencing a hit, down 0.75%. And Bitcoin back down under $100,000, much like we've been highlighting right here on this show, folks. So let's check out the S&P 500 heat map. And what do we have on a red day? A lot of red on the screen, folks. A lot of red. Big boys like Nvidia down 3.64%. AVGO down 4.42%. AMD down 4.13%, giving up all those recent gains it tacked on this week. Google down 3.03%, Microsoft down 1.5%, Amazon down 2.91%, Palantir down 6.38%, and Tesla down 6.55%. A little bit of green here in the health services and communications, but mostly it's all red, folks. Yeah, health did receive inflow of capital. You know what that also says, folks? Rotation of capital going on out of tech into defensive plays in the health technology sectors. All right, guys, so let's look at the S&P 500 on the SPY. And what were we talking about yesterday? We said we got up over this parallel, confirmed there on Tuesday. Then this following day continued pushing higher, but we actually tested the top end of this parallel. I said that parallel would be support unless price gaps over it. And what happened today? We had a gap and go, folks. This is what happens when you have a gap and go. And what do I mean by that? You got to imagine this area on the chart, the inclining parallel, like a trend line. And you got to think of it kind of in a way of you're going to be crossing a bridge or crossing a river without a bridge. Think how much energy that you would exhaust to do something like that. They did that back in the Oregon Trail days, and it would cost people lives. It would take a lot of energy to get through that river without some sort of bridge. Now that we have a bridge with this gap over scenario, it didn't exert that energy to slam down through that support. So it was able to gap over, like going over the bridge, and then just continue going down on the charts. A little heads up there was the opening this morning, implying that we were going to be going down further on the stock market. So I tell you here on the spiders, we see here a near-term inclining trend line from the August first lows connected over to these pivots. Notice that price was saved on it on Friday, November 7th. That's looking like the next target and test on this chart. It's going to be right at $668.80. If that breaks, watch out below, folks. The next major support is down here at $640. There will be a little bit of stopping place right here amongst this big red candle, likely at the bottom, right around $650. But that too can still likely be broken, as the major level of support will be down here at $640.64. Next up, the Qs. Nasty reversal here on the Qs, as we highlighted, down over 2% on the day, blowing through this gap fill from this big wick that occurred on November 7th. So where does that leave the Qs? Well, we're on a decline, as we can easily see. Decline right here. Now, one thing to note, if we do have price get back above this declining trend line, that will erase a lot of this negative sentiment currently in the market. So any bounces, be watching that we see if we beat this declining trend line, because that is now the trajectory on the Qs. Major support will be on this inclining trend line here, right under $600 at $596.62. That breaks, we're looking at $581.64. Next up on the SMH, SMH also experienced a very nice decline today, down 3%. But folks, where did it catch support? Right here again on the 50% area of this parallel channel. To remind anybody or any new viewers, you can see I contain this inclining parallel channel for most of price action from back in 2024 all the way through current times. We did have a long period where we were outside of this parallel channel. We fought to get back in it. It took nearly 2 months to do so. And then finally, we exploded up through it, even went on top, creating a bull trap scenario. Now we've come down and retested that 50 area now twice. That's telling me this area is getting weaker. If we continue to consolidate in this area, that means we're headed to the lower 50% of the parallel with support down here at $321.11. That would be a steep fall, a drop there of about 13%, 14% from the highs. Next up, we've got the IWM. Now, the IWM currently still catching support at 237. Now, 237, as you see, is being closed underneath. But we've had scenarios like this before where we had a test candle, then the following day have a nice bounce right back up. So still, this is the area of contention that you should be watching on the IWM. Following that up, should that break, 233.64, followed by all the way down here at $221.81. And this one would be a more solid level of support. If you notice, if I scroll back out on the screen, look at all that consolidation right here that took place. We have consolidation in this area too. So there will be a lot of support right here in this range under $225 on the IWM should the selling persist. Next up, guys, big story on Bitcoin, cracking 98,000. A lot of people said this was the lowest Bitcoin was going to go, right around 99,000. Well, they were wrong, as we're only 20% down from the top. So if you see this, we're just over 20% at 22%. That's a standard correction on Bitcoin. So it's not doom and gloom here. Matter of fact, we're very near a major support level created by this long-term trend line that you see drawn out from April of 2021, folks. We see for the longest time, this line has respected price, and it also typically provides a bounce when price accelerates from a distance down into it. So the near-term level of support is right here at $97,672. Should that level break, folks, we're coming down here sub 90,000, right in this range under $88,000. Notice all that consolidation right on top of that range too. There for Bitcoin would be a great spot to accumulate a little bit more Bitcoin. Next up, we've got gold. Now, gold today did take a day off on pushing up in the stock market, but that's to be understood. We've got a time count scenario pushing up, but we have confirmed above this yellow trend line also. Great near-term momentum on gold. I didn't see that coming with this big drop and bearish consolidation. So near-term pop, great for gold. The major area to test to see if this momentum continues is at $4,098. So be watching that closely in the coming days to see if gold retains that momentum. Next up, silver. Much stronger than gold. We went back and tested the most recent pivots that occurred here on October 13th. Still hanging up here too. So silver's not having a particularly bad day. We'll see what happens in the following days, as this was a massive big green candle up. If we follow that up with consolidation, that would be very bullish. In the near term, could potentially push price up here to the 50% area of this parallel, just about 56 to the low $57 range, depending upon when price gets up into that range. Next up, U.S. oil. As we discussed yesterday, that big red candle really damaged the charts. We were making bullish consolidation here on U.S. oil. And then this day yesterday on Wednesday, slam price down on U.S. oil, catching support right here amongst this consolidation. Next level of support down here, right in this area of consolidation, 57.35. Beyond that, we're going to be looking at the lows here, right around $55 for U.S. oil. So be watching that too with this big red candle. That's likely implying we've got more near-term downside coming on the chart of U.S. oil. Next up, nat gas. Now, nat gas remains strong today. Look at this angle of trajectory, folks. Nearly straight up. That's a steep mountain to climb. This is getting exhausted as we speak, folks. I'm truly shocked we continue to push up as we have been on nat gas. I was anticipating a little bit of pinball action going right here between this 445 level and 470. That has not yet happened. Doesn't mean it can't happen, but we're putting in our first day closing right up on top of this $4.70 area. That's very good momentum for nat gas. For it to follow up that momentum, it's actually going to have to close above today's highs at $4.81. That's a stout push for nat gas, but hey guys, it can happen. This is an amazing push so far. I do anticipate though, eventually, even if we tag 492, for us to be coming down to 445 and jockeying around right here in this area in case nat gas wants to go higher. Just to show you where nat gas charts has been in the past. I mean, guys, we're not at the highs, right? This is the weekly time frame. We're far off the highs here in nat gas, so we definitely could still go higher. But at least in the near term, this is a sharp move, clearly displayed there too on the weekly time frame, nearly straight up there on the charts of nat gas. All right, next up, we've got Tesla. Plus, hang around to the end of the show. We've got another viewer request with PDD. We'll be happy to check that out. All right, guys, so Tesla, we've gone over this chart several times before. The mega caps and the high-tech big flyers were under pressure today. Notice what's on this chart, though. We've got an inverse head and shoulders pattern with a targeted measured move all the way up here at $512.97. I was talking all through this consolidation, saying any pullbacks, especially down to 385.95, could be buying opportunities for eventually us to push and hit that $512 mark. Now, if overall sentiment in the market remains negative, that will be much harder for Tesla to hit this move unless they start releasing great news about new developments, whether that be through AI or through Optimus or any of their new products that are going to be rolling out. That's the way we're going to get up there to that $512 mark, plus positive sentiment in the markets. Right now, we're not having that. Still doesn't mean that Tesla can't be a buying opportunity on any dip. This sharp drop right now should provide a near-term bounce on Tesla. Should we come down a little bit further, you see support's not that far away. At $385.95, this general range could develop a near-term small bounce on Tesla that could float the price until sentiment returns, allowing it to come up and hit that $512 mark. Now, this mark is negated if price gets down under this neckline. Now, this neckline is a far distance down, under $300. If I was holding for this move, I would likely reconsider that should we get price under this consolidation. Since that neckline is such a sharp declining angle, I wouldn't want to be hanging around that long for a potential move all the way up to 512. So caution is advised there on that stock. Next up, the biggest stock in the stock market, Nvidia. Look what's happened today, folks. All right, now Nvidia, to remind you, we've got a longer term inclining parallel channel from April lows of this year. It's contained all of price with Nvidia. Even on this one day here in November 7th, when we did pierce the bottom end of it, we closed back within this parallel channel. Now today, clearly we have closed underneath this parallel channel. Nice bounce towards the end of the day to help us get closer to that parallel channel. And this is on the 10-minute chart, but clearly we're underneath it now. So that's step one for a breakdown with Nvidia. Step two would be another move lower, getting beneath this red candle. So the low here is 183.85. Be watching very closely tomorrow and potentially Monday. If we chop outside of this parallel tomorrow and close, and then on Monday close underneath this low candle, then the selling pressure is on, folks. Next support down here at $164.22. Note too that this area has a lot of price action. So it will be hard for it to get through. We likely will sell, maybe bounce right back up, hit this top end of the parallel, then sell, or hit the bottom end of the parallel, then sell further down to the 164.22 area. So be watching tomorrow's close on Nvidia very, very closely because, guys, Nvidia being so big, whether it goes up or down, it pulls the market with it. So you got to be mindful of what's going on with Nvidia. Next up, we've got Hood, also now closing beneath this inclining parallel channel from April, showing that this trend is likely starting to end. That doesn't mean it's the end of the road or end of the show for Hood. As we see here, Hood has accelerated up in the stock, up over $150 at one point, now trading down here in the $122 range, closing the day at $121.53. Should we get a close under this candle that occurred today, we're coming down to 106.42 as the next pit stop. on the chart for Hood. Now, keep in mind, every one of these parallels or trend lines that gets broken, they like to go back and retest that parallel. Now, the only way this negative sentiment is erased is if we get back inside of that parallel. So we've got a lot of qualifiers displayed here on the chart, all with technical analysis, really helps guide you through a trade, especially if you're maneuvering in and out of positions. Next up, we've got PDD. This was a viewer request. And so thank you guys. Thank you, the viewers, sending some of these stocks into us. They really help everybody gain knowledge and insight, especially on your favorite stocks. So this stock does have earnings coming up pretty soon. I'm flipping on the earnings. You see here, earnings are going to be on Tuesday, November the 18th. All right, so let's look at this chart. So we've got a inverse head and shoulders pattern right there displayed on PDD, and it's already broken. Matter of fact, it broke back here in July, retested that trend line, just like I described on the Nvidia chart, in the Hood chart. Notice what happens when this trend line is broken. Price goes up, retreats right back down to the trend line, then catapults. That's a beautiful springboard play. One of my favorite plays to do on swing trades. When you see a significant breakout, it comes right back down into the scene of the breakout. Boom. Look at that explosion that occurred on PDD. Now, since then, we've continued up, meandered sideways, and really started chopping around right here since October, the end of October, just been chopping sideways going into earnings. All right. So we've already had a nice move up. Now this consolidation could be clearing the door for this major move to be tagged. We'll see if the catalyst is going to be on earnings. If for whatever reason they report bad earnings, be watching support levels at 127.07. This area will still keep bullish momentum on PDD. Should we come down here to 119, that will start changing the trajectory of the pattern on this chart of PDD. Doesn't mean we can't bounce and fight our way out of it, but at least then probabilities will start to shift for a little bit more downside. So 127.07, be watching that closely. And then also on the upside, $147.44, still targeted measured move that is active on the chart of PDD. Guys, a ton of fun in here at Verified Investing today. I don't even know how many day trades we had. Gareth knocked off one over 10 grand by himself. Incredible. Come join us. Don't forget to like and subscribe to the videos. Also share it with your friends and family so that they too can learn some technical analysis. Lastly, don't forget on Monday, folks, this show is being moved from 3:55 to 4:20 p.m. Can't wait. Look forward to seeing you guys live at that time. Until then, have a fantastic weekend, folks, and I'll see you on the charts.